in a long time. With many small businesses still having a hard time getting traditional bank loans, peer-to-peer lending has become increasingly popular. The best-known company in the space, Lending Club, last year raised $870 million, remember, in that high-profile IPO. Other platforms also entering the space. Joining us right now is Sam Hodges. He's the co-founder of the London-based peer-to-peer marketplace Funding Circle. Sam, good to see you. Thanks so much for joining us.
Thank you for having me on the show.
How does it work? I'm a small business. I need access to cash.
So if you're a small business owner, like the millions here in the U.S. or in the U.K. who need access to capital, you can come to our site. It takes just a couple of minutes to fill out an application, and then we can turn around financing inside of a few days.
This is partly the reason for popularity of Funding Circle and others is because the banks have been crushed by Dodd-Frank, and they've been pulling back a lot in terms of lending.
That's absolutely right. If you look back, I mean, it's particularly acute post the financial crisis, but really a 20-year trend. Banks have really pulled back from smaller ticket commercial lending. And what that's meant is just a massive gap in the market, and that's where platforms like Funding Circle can really come in and help small business owners get the capital they need to expand and grow.
So it's interesting, though, when I look at where the banks have pulled back, it's actually not in the commercial and industrial loan side. It's in the residential mortgage lending side. So is there something else that you see on the small business side to suggest that the banks have pulled back from that space?
Absolutely. So you're absolutely right. You know, overall commercial lending has gone up post financial crisis. But if you look at loans under $1 million, which would be the type of loans that your kind of typical corner coffee shop or light CPG business or even some manufacturing businesses, those are the type of loans they need. That number is still way off from its 2007-2008 peak.
What about the demand for credit? Do you see people who want to start businesses, grow their businesses? Because that's an indication of how healthy an economy is.
Absolutely. I mean, we kind of experienced this firsthand. Actually, my partners and I, we came at this from the perspective of building up a network of fitness businesses all over the country. And we and many of our peers just, see opportunities to invest capital in our business, don't necessarily see that we can get capital from banks. And so we've got to look at alternatives like Funding Circle. And that's the story we hear all the time.
You were a small business guy, right? You had a gym franchise?
That's exactly right.
And you had the trouble getting access to capital, which is what led you to start this business.
My partners and I talked to 97 different lenders, including banks. And each case, we were turned down because we were too small. And this is despite the fact that the business had revenue, it was profitable, it was growing, or we were given rates that simply didn't make sense. People would just advertise one rate, but then you actually would do an APR calculation. It was a 40, 50, 60% APR. And so that's what ultimately inspired us to start the company.
So clearly, credit risk is something that has to be accounted for, and I don't know what your cost of capital is, so I don't know what kind of a credit profile you need to target, but tell us about risk control for a small business lending, big consideration.
Absolutely. No, it's a huge piece of it. So we take a very data-driven approach to credit analytics. Basically, every loan we score using our own proprietary model, filter out the ones that aren't going to be a fit, and then price the credit based on our expectations around default and loss. And the great thing is, from our understanding, we actually have the lowest loss levels of any digital small business lender anywhere in the world. Somewhere between 2 and 3% per year, which, given the overall mix of loans that we're doing, it's actually quite attractive.
Really interesting stuff. Sam, good to have you on the show today.
Thank you for having me on the show.
Thank you so much. We'll be watching Funding Circle. Sam Hodges there.